Welcome back. Time to talk to Patrick Morris, Senior Managing Partner at Hagen Capital here in New York City. Mr. Morris, nice to see you. Thank you so much for joining us today.
Nice to be here.
So I'm going to talk to you just about the data, today's data and tomorrow's data, and what it means for the market a little bit before I get into your analysis of what's happening. So tomorrow's employment report, how important is it for the markets, and will it set a new direction for the markets?
Well, I'm not sure it's going to set a new direction for the markets. The markets seem to be immune from headline news right now. It seems like people just want to bid up some of the junkier companies. The market's been on a real tear. I think we're looking at numbers that would compare to rally in, I think, 1938, I think is the last time we saw a rally like this. The numbers are important. Obviously, if the employment number is devastatingly bad, it's going to have an impact.
Yes.
But I think a lot of bad news has sort of been, it was over-discounted in the market, and now people are sort of anticipating that things are going to improve.
Okay, some people are saying that they're quite impressed with the orderliness of this pause that the markets are taking, the fact that they are holding on to most of their gains and they are not sort of selling off sharply. Did you notice that as well?
Well, it's obvious that they're not selling off sharply, but they do seem to be rising rather sharply, and they also seem to be, again, completely immune from any type of sell-off, any type of correction. You know, to me, you have to start to worry in a market like that about what's actually causing the market to go up session after session after session.
Yes.
What we've seen quantitatively is that a lot of the companies, when you really drill down into the numbers, it's really some of the lower quality companies that are having the biggest runs here. So I think as people start to sort out quality when it comes to earnings reports, when it comes to growth in revenue, I think you might see the market either move sideways or correct a bit here.
So would you say a big disruption comes about if you see a sudden flight to quality, and what would prompt such a sudden flight to quality?
Well, I think people have been talking about it for a while. And it's commercial mortgages. We went through the retail mortgage crisis.
Yes.
Commercial mortgages are still a ticking time bomb. You're seeing, you know, the number of new leases going out seems to have declined. There was a huge run-up in the value of office buildings, apartment buildings. You see it here in New York, headlines every day, these massive projects that have gone into bankruptcy and then into auction. You know, somebody's got to be getting hurt there, and that type of value destruction, if it starts to hit the big balance sheet banks, could be a displacement in the market.
So this possible displacement of the commercial real estate market, why doesn't it get enough attention? Why doesn't it get enough airtime? Why aren't people more worried about it?
You know, it seems to me that momentum is not just something you get in stocks. You get it in people's opinions. You also get it sort of, you know, not to take a knock on the media, but you have to show what people want to talk about.
Yes.
And when people are in a horrible mood, they tend to like to hear about all the bad news, and they want to just sort of stay depressed. Once you break that trend and people are feeling more optimistic, they don't really want to look behind the curtain and say, is there some lurking disaster out there? It's just not a news story that's really going to fly right now, and people would look at it as being overly pessimistic, or worse yet, maybe it would be construed that you're trying to take a cheap shot at the current administration, or you know, it's a tricky game to play to talk about potential disasters on the horizon.
Okay, one other concern you have is inflation, and also you talk about possibly weaker Western European currencies. Why are you worried about inflation now when people say it's too soon for us to even be talking about it?
Well, you've seen oil prices go up pretty dramatically. You've seen copper prices go up pretty dramatically. You've seen big rallies in the commodities. And this is at a time when order books are still relatively empty and global demand is pretty low. So when you see a return to, call it a normal environment, or if you see a return to a growthier environment, one would have to assume that commodity prices would spike up again. And that type of spike in commodity prices, which slows down consumer spending, is actually the kind of thing that sort of got us into this mess in the first place. It's not the only thing, but it was certainly an issue. And I think as you look into India, when you look into China, you have to ask yourself the question of, well, there's still major infrastructure projects that need to be paid for. There's still pretty rapidly growing economies. But if the Western European economies and if the United States goes through another slowdown, what is the impact? And I think it could be pretty sharp, pretty severe.
Now, the Indian markets, the Chinese markets, they've been on a tear. When a lot of hot money flows into these markets, does that make you nervous?
Hot money into India makes me very nervous because it seems to come in and go out with unbelievable ease and extraordinary speed. And what that creates is a very volatile market, and it can be very hard to hedge in certain emerging economies due to restrictions on shorting, et cetera. There are things you can do, But I think when you get big run-ups that are very quick in nature, I think you have to worry about the subsequent fall. So I would say get your money out before you start to see that. You have to get out before the big money runs for the door, or you won't be able to get it out in a way that you're going to be happy with.
Okay, great. Thank you so much for your time today. It's always nice to see you. We'll see you again soon sometime.
You're welcome.
Thanks for your time. Well, just before